Something in this group does not belong. Let's take a look at energy earnings for the past quarter. But Dan, before we do that, the 5-day on crude has been quite extreme, from 53 to just about 62 in only 5 sessions.
Yeah, I think, what has happened has been a lot of money that's kind of been rotating out of equities to a certain degree, because we have equities that are really well over what is a historical average for PE ratios and maybe a little bit overstretched. Commodities are way down. Should be a lot of money that's kind of seeking a home at this point, not really happy about running to Europe or Asia. Maybe it's taking some of a little bit of a stake in oil. I think prematurely, but right. I think that and a weaker dollar has been most of the reason for the run-up.
Well, let's look through 5 names. First one being EOG, because there was a lot of love with that stock going into the quarter. So you wonder, as even when they're taking up their production guidance, or at least meeting what they thought for 2015, if it has to do with the underlying getting back over 60.
Yeah, I think there's something to that. There was a big Einhorn presentation at the Irisone conference, which of course put a damper on a lot of these dedicated fracking stocks. So EOG has been reaching up to a level, and I always thought that it was getting a little bit ahead of itself, much like the oil has been getting ahead of itself. But EOG has been pricing basically with oil barrels at around $70 to $75 a barrel. So it's a little bit overstretched on its valuation here. They have reported, as well as everybody in fact has reported pretty much the same. What they found is, of course, increased efficiencies, terrific costs for well completions going down. A lot of these guys are going to make some of their predictions for oil production this year that they didn't think they were going to make.
Well, it's interesting because EOG was the first one to go, and it was also on the same day as Irisone, right? So it's kind of like, the poster boy, and they got beat up first. Because if you look at Cimarex, which is a stock that you like out of the entire group,
right,
it reported essentially the same as EOG, but ended up a little bit on the day.
Right. I mean, I think we're splitting hairs when we talk about the big dedicated alternative. I mean, the unconventional plays out there. Some are missing by a couple of cents, some are not missing, some are gaining by a couple of cents. What we really have to look at is how big the efficiencies are growing, because that's going to be really what turns the next cycle. The next up cycle in these stocks are going to be based on who can get it out for less. And that is really where we are right now. It's a very kind of micro way to look at these stocks, but that's where we have to look. That's the next up cycle in these stocks.
Now, if you look at Anadarko, the first thing that I noticed was an increase of expenses of 127% and a huge cash drawdown since December 31st.
One-time charges also will be inside of some of these reports. It just depends on which quarter they take them. For me, the one stock that I'm kind of looking at that I haven't looked at in the past is Devon. They reported clearly in a great place, and they were one that I tried to stay away from because I thought that they doubled down on shale, U.S. shale, at the absolute worst time. But in fact, if you look at them relative value compared to some of the others, they actually strike me as having a pretty good space right here. They've done very, very well in the Wattenberg, and of course in several areas of the Permian that are hot. The Delaware Basin, where they've been interestingly playing along with others, EOG and Pioneer and others.
Let's wrap it up with the largest U.S. shale play, Noble Energy.
Yeah, again, this is the one plus I can give to Noble, and they also had a very tough quarter, is in the Middle East with their natural gas. If they get approval to sell some of that natural gas to Egypt, that'll be a nice boost. But that's something to look forward to. That's a little bit overseas, not quite in the same general area as the fracking kind of play that we're kind of looking at right now. So Noble for right now, I'd say I'm staying away from it a little bit more than some of the others.
Well, it'll be interesting what happens in the third quarter to see exactly what we're saying for Q2, because it seems like every other week projections are changing.
Indeed. That's the point. The point is, if oil gets to a certain price, if it spurs its way up towards 65, there are several who will start taking the tarps off of these rigs that they've shut down. Then you start the cycle all over again. Rigs counts will start to go back up. Again, production numbers will start to go up. And again, what we have in terms of a very large surplus of oil is going to get even larger. So we may be going back into a secondary cycle, sort of a repeat recession, oil bust recession of sorts.
All right. Thanks very much, Dan. For TheStreet in New York, I'm Jill Malandrino.